As Bitcoin approaches its halving, excitement and speculation soar. CZ predicts a surge in Bitcoin's price post-halving, but warns against immediate expectations. Instead, he emphasizes the long-term impact, suggesting patience and strategic investment. Will Bitcoin fly high? Stay tuned, don't forget to subscribe, like, and share, and let's start. So we're starting off with celebrating the first halving with a beer that cost 1 Bitcoin in 2012. Such a legend. And here we could see this post from the 2012. Next up, there's $3.4 billion in Bitcoin short liquidity being built around 72,000. There is a big squeeze imminent, and we can understand that. I challenge you to accumulate Bitcoin without the KYC during the 3.125 EPO, and it's going to be just 4 years for you to purchase it without the KYC. The next position we are going to be, it will be just 1 Bitcoin every 10 minutes, and that's not going to be that much. So you need to prepare and purchase for this 4 years continuously, and then the next bull market after this one where we are in already is going to be $1 million Bitcoin 100%. Because it's kinda hard to tell if it's going to be $1 million per Bitcoin this bull cycle, as probably it will be the next one. Your gentle reminder that the Bitcoin halving is in a little more than 12 hours from now. For all those calling tops in crypto, study history. The halving usually marks the start, not the end of the bullish part of this cycle, NFA. Also, Bitcoin is reclaiming lost ground while funding remains low. It took nearly 2 months of disgusting price action, but the system has been cleansed on fraud and greed, ready for the next leg higher. If we somehow manage to see the Bitcoin halving 2024 at 69,000 on the 20th April, I take it confirmed that we are living in a simulation. Amazing double bottom on Bitcoin. The vertical line was the pivot point and perfect touch again to the target price. Look at how the intersection of our trend line spotted the perfect timing of the bottom. I go into more details on this in our upcoming update. Can we all buy $21 worth of Bitcoin on the halving day? Reminder, I am in for today. You? So basically, I am in as well, but I don't think that many people will follow this challenge, but at least I expect like a couple of thousands people to join this challenge, and this will pull price to the higher positions, and maybe we'll reach the 69,000 in the next 10 hours that are left for the Bitcoin halving. This is how the Bitcoin halving works. It's basically starting from 2009, it was 50 Bitcoins per block, which is 50 Bitcoins every 10 minutes, around 10 minutes. 2012 it got halved to the 25, 2016 12.5, 2020 it was 625, which we are in right now, but it's only a couple of blocks left, so we are entering the new epoch, a new era, the 2024 start 312.5. The next point will be 1.5 Bitcoins every 10 minutes, which is not that much. Bitcoin continues to destroy leverage traders and shake out the weak hands while consolidating above the previous cycle highs, all to prepare for the journey to 100,000. Hold on tight and enjoy the ride we are entering. This is the potential roadmap for the current cycle. As we stated before, we believe we are in a midterm correction right now that could take us to mid-low 50Ks. The rest of the year should lead to another pump, fueled by continued institutional buying, halving itself, and continued adoption. Summer times are usually boring and sideways correction months. Quarter 4 should once more be a very strong quarter, potentially lifting once above the 100K. Good times ahead. Don't get discouraged by pullbacks. These are normal and necessary for a healthy chart. Also, the main topic of today's video, the Bitcoin halving expectations versus realities, insights from the CZ. As Bitcoin undergoes its quadrennial halving, investors and enthusiasts alike experience a rollercoaster of emotions. This also leads to heightened market activities. Understanding these patterns could be crucial for those participating in or observing the cryptocurrency market around these pivotal times. Let's explore more about what could happen in this Bitcoin halving. Rise in anticipation and speculation. In the months leading up to a Bitcoin halving, the crypto community witnesses a significant increase in dialogue and speculation. This period is characterized by growing chatter, news coverage, and a mix of anxiety and excitement about the potential impact of the halving on Bitcoin's price. The hype builds as various stakeholders, from seasoned traders to casual observers, fuel a narrative stick with the hope and high expectations. Someone asked me if Bitcoin halving is like a stock split. We are still early. Answer is no. Happy halving day. Immediate post-halving reaction. Despite a feverish build-up, the reality immediately following the halving option often temper expectations. CZ points out that a day after the halving, Bitcoin's price does not double overnight, contrary to some of the more optimistic or sensational predictions. This leads to confusion and disappointment among the many in the crypto community who may have expected instant gratification from their investment, as the absence of an immediate dramatic increase in price brings a crucial reality check. Bitcoin responds to complex market dynamics and investor behaviors, not just its intrinsic scarcity. Long-term price impact. The most significant effects on a halving, according to ZZ, tend to manifest approximately a year after the event. Historically, this period has seen Bitcoin reaching multiple all-time highs, stirring discussions and debates about the causes behind these surges. And it appears that post-halving, as the reduced supply of the new bitcoins constricts and demand remains steady or increases as the price tends to climb. This delayed reaction underscores the importance of patience and a longer-term perspective in an understanding Bitcoin's market behavior. Moreover, the recurrent nature of these cycles highlights the short memory of the market participants who often expresses surprise at these predictable patterns. In conclusion, we have that CZ's observations serve as a reminder that while historical trends can offer insights, they do not guarantee future outcomes. The cyclical nature of Bitcoin's halvings invites both opportunity and risk, requiring investors to approach the market with knowledge, preparation, and caution. As the halving fast approaches, what's next for Bitcoin miners? So with the Bitcoin latest halving estimated to occur around 8:30 p.m. ET, we asked several firms in the industry what impact it will have on miners in the cycle ahead as their block subsidiary reward gets cut from 625 to 312.5. Ultimately, perhaps CleanSpark Chief Communications Officer Isaac Halleck put it best that this halving will be much like the season in the companies, and like a lion and out like a lamb than the wolves. Halleck told that block what do I mean by that? There is a lot of excitement around the halving, but in terms of practical impacts, it will take months. It'll be a war of attrition as less efficient miners hold on as long as they can. Then comes M&A. Why this time is different? Setting the scene, Brian Wright, Galaxy's co-head of mining, explained that while the Bitcoin's last halving in May 2020 occurred prior to significant price appreciation, with miners already operating near the marginal profitability, as Bitcoin recovered from a COVID-related crash 2 months prior. This time round is very different picture, as Bitcoin price is up 120% over the last 6 months, and many miners have reported marginal production costs of around 20,000 per Bitcoin, and there are fewer miners that will need to immediately halt operations following the halving this month. Wright said. However, miners will be less profitable, forcing greater scrutiny over discretionary costs that could help mitigate some of the immediate decline in revenue, as he added. And I expect differentiation based on power strategy and cost to mine as miners prioritize maximizing margins versus top-line growth. Bitcoin infrastructure firms Blockstream's head of business development, Adolfo Contreras, said that having gone through 3 halvings already, established miners should be well prepared for this one, providing their secured sufficient financing and liquidity to offset their reduced rewards. Notably, this is the first halving precedes by a significant price increase, which has likely improved liquidity planning for and involved, as he said. So that's kind of all the information we have on today's video, and if you are interested in more, don't forget to subscribe, like, and share. See you in the next one, and peace.